Morning, guys. Happy Monday. 4 straight days up in the S&P 500. We've moved 150 points in the S&P in 4 days. We're now 75 points or so from the old high. That was early September. Got a little bit of a gradual melt up. Last week it was on cyclicals. Today it's on the old-fashioned mega caps. Let's take a look at the markets that are moving here and the sectors that are moving. I just want to note China, MCHI, which is the broadest China ETF, that's a new high for that. China's been on a tear in the last few weeks. Tech also strong today in consumer discretionary. So remember last week we saw the cyclical names like industrials and banks rallying. This week we're seeing a little bit more favoring towards the other areas here like tech and the old school industrial names here. If you look at some of the mega caps after that, just want to show that. Put that up in the reopening stocks, too. Airlines are a little weaker. You see that? Last week, they were doing well. Industrials were doing well. Textron, 3M, Honeywell. They're lagging a little bit. I think there's a little bit of concern about the stimulus story. These things tend to do better when the stimulus is doing better. And instead, as I mentioned, mega caps are strong today. They tend to do better when stimulus is not necessarily doing as well. And you see Apple, Amazon, Facebook, Alphabet, Microsoft, all to the upside. Work from home beneficiaries, the Etsy's, the Adobe's, Activision's, Electronic Arts, they're also generally doing a little bit better this morning. Salesforce slightly to the downside. So what matters to the markets right now? There's 4 things that really are moving things. Number 1 is the stimulus. Everyone keeps asking me, why is everyone so obsessed with stimulus, pre-election, post-election, partial, comprehensive? It's the bridge to the vaccine. That's what it is. And the markets believe that the stimulus so far has been very successful keeping the economy afloat. That's number 1 out there. The vaccine and the reopening story has been generally positive, and that's been helping the earnings situation. Get to that in just a second. The contested election still is out there, but there's a little less concern in the last few weeks. You can see that in some of the volatility measures that we use here. As for a blue sweep, that's still way down on the list, hotly debated about the impact. We'll talk about a little bit more in the coming weeks if that, in fact, emerges as a possibility here. In terms of earnings, that we're in the middle of earnings season. It's starting tomorrow here. The good news is the numbers keep improving. July 1st, we were expecting 25% decline in earnings for the third quarter. That's awful, folks, but it's gotten better. Look at that. Today, it's only 21%. Why? Well, because the analysts have been overestimating the downside and underestimating the positive, frankly, and this is certainly very positive. Normally, analyst estimates tend to not get better. They tend to get worse because they tend to be too optimistic. This is the opposite of what's happening now. That's a good sign for earnings. The other good sign that I see, and I've been emphasizing this, the early reporters, they've just been killing it. You know, your FedExes, the other names that are reported early, we had 22 companies reporting so far, third quarter, 20 have beaten, and the average beat has been 25%. That's an extraordinary number. I keep emphasizing that. Normally you see 3, 4, 5%, and everybody's sort of happy with that. But again, way above the estimates of the analysts. And that indicates, again, analysts are being too conservative. And as a result, most of these companies, the majority of the companies that reported have actually seen their fourth quarter numbers raised a little bit. What's the bad news? What should we look out for? The bad news is that we are still hostage to the vaccine and the reopening story. If this gets notably worse, that's going to impact the fourth quarter earnings. And David, that's why you're seeing the volume on up days much lighter than the volume on down days, because analysts, and Carl, the analysts are concerned about what's going on and uncertain about the fourth quarter. So there's not a lot of conviction as the market starts to melt up. But as you can see, Carl, it's dragging people in here. 4 straight up days, and they've been powerful up days by and large.
Shepard Smith here. Thanks for watching CNBC on YouTube.